Hey, Parker, welcome. Thanks for joining us.
Absolutely. Thank you so much for having me.
Well, Parker, you have a lot of expertise. You're an entrepreneur, business background, et cetera. So I kind of swerved into this recently through somebody. I was following it. It didn't hit home too much until a conversation I had with someone. What is it that got you so interested in this?
Well, so on a similar note, it's just something I had kind of had my finger on the pulse of for a while. And I have a handful of friends in the financial industry that I have worked closely with for a number of different loans or purposes. And they had brought up an interesting point that I feel gets neglected when you have the conversation about CBDCs, and that is that they would inherently carry a means to exacerbate economic and financial problems that we already have and essentially undermine our current economic and financial industries. One of the biggest concerns for me is that with their creation, the creation of a CBDC, your infrastructure for that is going to essentially carry with it the ability to convert deposits from commercial banks into a central bank digital currency, which in the context of events we've seen this year with the Signature Bank run, Silicon Valley Bank run, that would exacerbate bank runs when there is an issue. In essence, you could completely destroy the privatized banking sector with the creation of a CBDC, because when consumers get scared, they go to withdraw and contract that money supply or their monetary supply. There's a decline in spending, and they pull all that money out of privatized banks. They move it into the central bank, and that money is just stagnant. And so you essentially have a collapse in banking and those jobs and that finance sector. It would undermine credit and lending, and it just really is kind of a concerning view.
That's one I hadn't thought about. I'm more looking at the individual, but you're exactly right. That's what it would exacerbate, because it seems to me, as frightening as it was with Silicon Valley Bank and some of the others, I don't know about you, but it seemed as if the system was able to isolate that relatively effectively. With this, to your point, this would be much more massive.
Correct. So if you have consumers who are already concerned about the state of the banks and they're going to withdraw their money and they want to, pull inward, a centralized bank digital currency gives them an outlet to pull their money out of privatized banks and still, store it somewhere so it's not, cash in hand. They're giving it to the federal government in that respect to store for them like a bank would. But in essence, they are crippling the private sector in doing that. And you lose, like you mentioned, the ability for the markets to kind of correct and for the privatized sector to adjust and adapt to those issues.
Parker, let's talk on the individual level, too, given your background, entrepreneur, et cetera, and your service. Thank you for that, too. We had Scott Perry on, the congressman, on this, very concerned in the long term with this, more knowledge of the government, more social control, more targeting of individuals, more making people answer all kinds of questions, I guess. Is that just fanciful, or does this open up that possibility a bit more?
So this absolutely opens that possibility, and that's actually really concerning to me as an individual. So I note that a CBDC, a lot of its proponents, they say that it would increase payment efficiency and it would allow for better control of monetary policy by the Fed, but that definitely comes at the expense of them having access to all of your financials. Something that was particularly concerning to me that I read just this past week was that Brazil's central bank digital currency actually contains the code for their Federal Reserve equivalent to seize your assets and freeze your assets, meaning that if an individual like you or me were to put our money into a CBDC, the federal government would just have with it, without necessarily the process or due process, would have the ability to take your money away or freeze your money so that you couldn't spend it. it would also come with some really concerning implications as far as personal financial privacy, where if you think about right now the access that your bank has to your spending records, your bank statements, your credit card statements, you would be giving that power essentially and that information directly to the federal government.
Yeah. So, Parker, you've really looked at this for a while. What is it or who is it that's driving it? You mentioned the argument, this will be quicker in getting payments and all the rest of it. That's minimal versus these real concerns that we have. I'm concerned, I don't know about you, with the Fed, who I think meet again tomorrow, in that they're poised again. They don't like the inflation rate. Okay, we know the government created that. And the damage they're doing to various sectors like young people or first housing and things of that nature by continuing to raise the interest rates. So what about that aspect of it? And again, I'm very glad we found you, because you have just a kind of a laid-back, sober approach to this versus ranters and ravers. And you're not saying all this is going to happen, but it makes it much more possible. That's what the fear is.
Mm-hmm. Absolutely. So your primary question, who's driving this? Honestly, there's a pretty big spread in politics right now, where you have a relatively partisan divide, a little bit of crossover, as well as federal organizations. You get the central bank already and the Fed that want to have that control over monetary policy. They want to be able to, more effectively drive either inflation or reduction of it. And so they are looking at this completely disregarding the individual and the personal, freedom aspect and privacy aspect. They're looking at it from a control perspective. And I view a lot of lawmakers who are supporting the central bank digital currency also viewing it from a control aspect. So I already kind of oppose that, because I generally want to always err on the side of individual freedom and personal responsibility. However, you do have strong opposition to this in politics as well. I think just recently, back in March, Senator Ted Cruz had introduced legislation that was specifically to prevent the Fed from ever being able to create a CBDC. Obviously, that's run into some hiccups. Also, I think Representative Tom Emer, he had introduced a bill, I think, called the CBDC Anti-Surveillance State Act, which would prevent the Fed from collecting that individual financial information through a CBDC. So that would also kind of cripple a CBDC if it were to ever come to be. So there is some opposition, and there is a back and forth here. It's not, necessarily going to be an overwhelming support for a CBDC. However, there's, still the risk that this could come to be, especially as we look towards South America and the European Union, where other nations are already implementing their central bank digital currencies.
Yeah, we already have some experience with this. Parker, very nice that we found you. Where do listeners find you? We mentioned American Thinker. You're a commission officer. Where do they go to find Parker McCumber?
Correct. I'd really appreciate if they check me out on Twitter. My username there is Parker_McCumber. McCumber is spelled MCCUMBER.
Parker, thank you very much. Hope to talk with you again real soon.
Hey, thank you so much for having me. It was an absolute pleasure.